Good morning, it's Jonathan Barrett with the morning debrief. Whoa, let's get that camera working. Whoa, there we go, a bit scary, that's okay. Righty-ho, there we go, we're all set in order. Morning debrief, it's May the 26th, the current time is 7:55. And I think an interesting night last night. A little bit of a turnaround in sentiment towards commodities. Is it the right thing to, is it the right time? Is that just all dollar weakness? I think that's something we're going to have to consider. Because when I looked at those numbers last night, and they weren't all that encouraging. US durable goods orders down 3.6%, new home sales also down as well. I get a sense of feeling that the recovery's not there, but dollar weakness certainly was, and maybe that's what actually helped some of the commodities along last night. Apart from that, market took heart of that, and of course we had a positive close on the Dow last night, up around about 38 points. So let's see, we are coming close to the end of May, and when in May, stay away. That's something we've always looked at. That certainly held true this year, which was quite interesting. Maybe we are getting a little bit of strength, but we'll run through that, have a little bit of a look as to what some of the markets have done. And don't know what happened then, but that's quite interesting. Let's just, there we go. So we're all back normal now, which is good. Okay, so let's have a look at a bit of a rebound or a bit of an idea of what happened last night. Okay, just a little bit of a cross there. The Dow was up 38 points. The S&P was up 4. The Nasdaq was up 15, relatively strong. The FTSE up 15. The top 50 was up 15. FTSE was up 11. The CAC 12 and the DAX 20. So quite good there. Local market on the futures closed up 40. Expect a positive opening this morning for our local market. So that's quite good on there. Well, thinking of that, let's just have a look at the local market and just have a look at the daily chart. I guess the analysis that we've got at the moment is, well, it has been negative as everyone has read these, listened to these reports for a while, and there's a little bit of a bounce there. The daily chart, I don't think that's daily, but let's just have a look at the weekly, then we'll go to the daily. Because that little bit of a bounce is sort of a little bit encouraging. I know that, and here we are, yeah, look, that is interesting because, I mean, we're still stuck in this big range here. We're at the lower end. There's still a chance for it to trade low. Keep an eye on 45.50, that area there. But this is the buy zone, there's no doubt about it, and obviously stops below here. So I think you're at an area pretty close. Let's see how it trades today, but you're at an area of accumulation for the SPY. So I think, if anything, that's not too bad at all. But stay close to it. Let's have a look. Also, I think it's probably worthwhile just having a look at the Dow. Yeah, I mean, that's come back, a bit of bad data there, but let's have a look at that hourly and see what we can make of it. Bit of a bounce there as well. So, yeah, you might find that after that losing streak we've had for some time, this does represent a little bit of a low for it. So, once again, I guess we're in that buy zone. Okay. Let's move on to dollar index, and then we'll look at some of the commodities. Dollar index 76. Still like this type of formation here. A little bit of divergence here, which suggests a bit of strength, but still favour that dollar to trade higher. And that sort of suggests, well, our commodities ready to go higher. And that to me is one of the big issues at the moment. If we quickly have a look at the crude data. Crude data last night, we saw quite a large draw in diesel and heating oil. That was a bit of a surprise. That's why we saw that lift. However, on the other side, look at the gasoline, a big surge in gasoline inventories there. And that, to me, is sort of sends a bit of a mixed data. But obviously the market's spent a long time trying to get through 95. That has been an area we've looked at. It hasn't made it. And, of course, I think those shorts at the moment are getting squeezed to the top side. So I think here, if you buy it on a break of 101, 80 or 102, then that'll confirm the range, and we move up to 105. Similar story there with copper. Strong move last night, 410. Pretty volatile though, there's no doubt about it. And they were right at resistance, so probably expect a little bit of pullback on that one. Now we haven't got any positions in crude at the moment as well. Gold, it's been quite frustrating to trade gold, but I think given that we do have a bit of divergence here, I wouldn't be surprised to see it come back to 519, 520. A break of 20 on that downside will ship it a little bit lower. Likewise, your stop has to go in at 15.35. There's no doubt about it. If you are short, this formation once again told us that it was going to go higher. It's done that, and if anything, there, I think that might have a bit of a rest. But there's interesting data coming out of China at the moment, and what we are actually hearing is that the Shanghai Gold Exchange is, because of the success of the global ETFs, they're thinking of launching one. Now that's going to see a little bit more demand come to the market. Would I jump into gold at the moment? Not quite yet, but that just gives us an idea that we're certainly on the lows of the lows. Strong move in silver, as you can see, that's the way it trends, which is quite encouraging, but expect that volatility to continue. Okay, so we've covered that. Let's have a look at the Aussie dollar, a couple of the currencies, 105.24, a good bounce there. I think dips a market will look at to buy now, so 105, somewhere like that. I think you could probably say, well, look, I might as well take something off the table there. So that's the gold. Dollar yen, everyone knows we've got a trade on. We've had it for ages. It's been quite boring. And look at the way it's been charting. Look, it's obviously not a breakout trade to the top side, but I'm adding to positions on the breakthrough 80.40. Stop obviously goes in just below that 82 or the low of the day of the break. It's just one of those trades which just seems to be just continuing to trade higher. And as you know, we feel at the bottom end, low at the bottom end, so it's the right thing to do. Takes out that level, then potentially up to 84. So we're happy to hold on to that little baby. Rightio, in terms of economic calendar, private expenditure in Australia, a little bit of data across around the world. I guess the most important stuff is what's happening in the States, GDP, personal consumption, jobless claims, etc., etc. Tokyo CPI, keep an eye on that because that's obviously going to affect our yen position. But if anything there, I would sort of think that the yen should remain relatively weak as a result. Stable, but weak. Okay, well, that's pretty much it from me. In terms of themes that we're following, yeah, we still have this long dollar theme because that's how we think commodity prices can be controlled a little bit more effectively because that's the way the market wants to trade it. So I still continue to look at that, although the last couple of days have been certainly consolidatory in nature. We're still long the dollar yen. We're out of the crude oil market, and we're, as I said, long US, we're short Aussie, but I'm seriously thinking about turning that around. So grains still long, good to see a little bit of life there, and obviously those weather patterns in the America not helping that at all. Well, that's about it from me. Have a great day, and we'll certainly talk to you tomorrow, and bye for now.